All right, everyone, here we are with ticker symbol NIO, NEO Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. And to all my subscribers, welcome back. And don't forget to smash that like button, guys, to let me know you guys watch this video. And also, it's one of the quickest and easiest ways, if you don't have time to comment down below, to say thank you and also give me that feedback and a positive recognition to the insight that I'm sharing with you guys. So let's jump into this chart. NEO Inc. has had that sideways movement effect. Every time it runs up, it jumps up, sideways movement. This was the longest period. Then it did it here again. This was the shortest, and here we are seeing that sideways movement. I mean, it's been a lot more volatile, but like I've always said, as long as this does not break through about 50% or 60% of these gains, this is all healthy movement because the volatility of the market does exist. The ups and downs are going to happen, and NEO is going to continue to work its way to stay above the 50-day moving average as much as it can in that sideways movement until the next jump, as more investors jump in, and also their innovation, their earnings, and also their balance sheet starts to look a lot stronger. That shows that the company is growing. So currently right now, support was broken through, then it rose back up and it stayed above the 50-day moving average, but we have some very important things to pay close attention to for tomorrow. Obviously, the support and the resistance have slightly changed. They're still important numbers, but let's look at what is more important for tomorrow. The 50-day moving average is catching up to the price, and that's 27.24. We are slightly above it at 27.42. The moment we're below it, we're in bearish territory. We were below it today for NEO within 1 hour time frame, and from that point forward, the bulls appeared and they've leveled off slightly above it. So for the bulls to maintain themselves above the 50-day moving average, they need to break through resistance, and that's 27.85. They need to turn 27.85 into a support and break away from it to reach newer highs, new resistance levels, and aim towards the highest point reached in this peak of 28.60. That is an important number, but before getting there, the first step is 27.85, turning it into a support, pulling away from the 50-day moving average in an upward direction. On the other hand, we have what the bears want, and this is a really close one. That's why the tug of war tomorrow will be interesting. The bears want to break through this support, and that is 27.29. If 27.29 does get broken through, there's a really small window between support and the 50-day moving average before this ends up in bearish territory. So I want to advise and emphasize to all investors, pay very close attention to how this stock is reacting and how quickly is it moving to newer lows, and are the bears or the bulls dominating the chart. If the bears break through support, they're most likely going to work their way towards the 50-day moving average as they're getting closer to it. And it's not that big of a difference. It's literally a 5-cent difference. Get themselves into bearish territory and pull away from it in a downward direction. So important to look out for that. And the second lowest point of the day before the bullish run reappeared is way down here, and that is 26.62. So you have that window between the 50-day moving average and 26.62 to see how it's reacting, and if the bulls have a chance to reappear and bring it back up, or if the bears are tearing this one down to newer lows. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share, and I know it doesn't sound like a lot, but per share that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.